Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, November 10th, 2025. It is 10:43 a.m. Eastern Time. My charts are back online. The server they sent out. I checked the site and they gave an email update. They had issues, so right after the market they went down. But anyway, I'm back online. Everything's up and running for the time being. I'm going to start out here. What I'll do is I will get to a lot of the other stuff in probably another video today. The other stuff being individual stocks. We've got tons of trade ideas, long, short, commodities, precious metals, all that other stuff. So I'm going to start out with the markets. A lot of buzz because the volatility spikes. So there's been finally some more activity on the homepage. I've replied to a lot of comments. I always encourage you if you're, want to know what's going on, come into the site from time to time and check. And in today's comments, I replied to a couple of the recent posts. It just expanded on my thoughts. Again, the semis are pretty big to me right now. So I'm very much watching and waiting. I'll get to that in a second, see how they close today. I just fired off a post out to you on the NQ futures, giving you what was likely to be the bounce target zone for that bullish falling wedge breakout. I give you that setup on Friday. It never broke out on Friday. We went down to that I'll get to that in a second. Let me start out here because I don't want to forget IWM. We have two swing trades out there right now on the indexes, QQQ and IWM. Now, again, you can trade SPY if you want, but as I pointed out, and I mentioned again on Friday that the financials have been holding up, and you need to see those buckle and break down before the broad market goes down, or before QQQ goes down only, more to, expand and open up the longer term targets. But let me start here, and this will be a recap for some. I know a lot of what I do is repetitive, but I haven't covered IWM in a while. And there's always either existing subscribers that's been checked out, maybe getting back into the markets because they see volatility picking up, or new subs. So this is IWM big picture. This is my weekly chart. You can span back decades on the weekly. And the bigger picture is this. We've been, the small caps have been going nowhere since late 2020. They've been in a very large sideways trading range. Has the potential to be a triple top pattern. You have three pretty much distinct highs all around the same level. And then, so the last time we topped here, we went on to break this primary trend line. We did a breakdown and back test. This is the primary uptrend line off the lows. Breakdown right there, back test for a couple weeks. And so we're still there. So it's anybody's game. When you have a big, well-defined pattern like this, well, first of all, it's a trading range. If you want to just keep it very simple, that's what you're looking at. It's a very large trading range from top to bottom. Let me just measure it for you and tell you how much. I have to grab high and stop low so I don't move all the annotations, or I can turn them off. That's the one way to do it on this platform. So from the top to the bottom of that trading range, it's 33, almost 34%. Going to give you an idea. In the MO for a trader, when you recognize a trading range, it's very simple. You can overthink it if you want, but if you want to just keep it simple, what you do is you sell the top of the range. That means if you're long, that's where you close your longs, and or short, and then you go down, swing it down to the bottom of the range, and then you cover shorts and go long. So as I said recently, first of all, we had a breakout. It was ever so slightly above it, and it failed. So to me, that was a check mark. We shorted the breakdown of the trend line, the back test, and the fact that it had a failed breakout. So there's, to me, three reasons to be short right there. Four, actually. Number one, the top of the trading range. Number two, the breakdown and the back test of the primary trend line. That's 2 and 3. The breakdown and then the back test followed by the rejection. So there's 1, 2, 3. And not to mention the technical posture, overbought conditions, divergent high, and everything else. Now, like any pattern, this can and actually will ultimately break out one way or another. And usually from these trading ranges, I always say it's like energy building like a coiled spring. And so sometimes, you might have divergences, overbought conditions, which helps to see this kind of correction, consolidation that tends to work off. You can see the overbought conditions alleviate somewhat the longer you correct there. And then the bigger picture is And again, bigger picture means months to years. When you have a breakout of a trading range that spans 1, 2, 3, 4, 5 years, you're going to have a breakout and a trend that's probably going to last several years, at least a year or more, right? So an upside break and a solid upside break would be bullish. Again, not one I would chase. I would rather pass on it. I'd rather get stopped out on this short and just let it run because it's just me, my style. I'm not going to, with big divergences, overbought conditions, other metrics, many other things I've covered in the market. I would just let it go, and it's not my trading style to chase a trade that doesn't align with what I see in the technicals. Now, so again, I point that out, and if you're bullish, it's easy. It's a very easy strategy. You take it at this point. You want to see a break at least of the highs there. At least take out the recent highs. I don't know if you're going to recover that trend line anytime soon. It's pretty steep, so I wouldn't count on that. But if you like it, you take it, and wherever you take it, you have stops. If you want a very objective level, let's say you have a high degree of confidence we're going to go and break out, and you want to just go long now pre-break of those highs. Well, this is a nice support right here, 231.38. So you could have a stop there, and I'm just giving you, for an example, that'd be only about a 5% stop loss order. So I'm sure if you think it's going to break out and run, you're going to have a lot more than 5% upside. So, the minimum RR on a trade to me is usually 2 to 1's a minimum. 3 to 1's a sweet spot, but it all depends on the individual trade. RR meaning risk-reward ratio. You risk $1 to make 2, 3, 4. Again, every trade's going to have its own, but ideally you don't want to be taking trades with much less than a 2 to 1 RR. Okay, so there's IWM. That's a long-term picture. Here's our official trade idea. Official trade ideas, I'll try to give you a stop, suggested stop. It gets a little tough when you have multiple entries on trades because then everyone's price is different. But this is the primary uptrend line. There's the breakdown backtest, rejection 1. Second backtest, rejection 2. We've remained, the stop remains on a weekly close above 250, 250. So far, no violations of that. But you can see this is big support right here. This is what we hit on Friday. And again, the reason I like to do these long-winded videos is to kind of reiterate, if you've, been keeping up on the site recently, or even just the emails that you get when a new post is published, we had a flurry of trades, particularly short side trades, hit one or more price targets just in the last week or two. So again, you're going to bounce when you have a lot of things hitting price targets. My price targets are support levels. So it only makes sense if boom, 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 things start hitting. Now we had some sell signals too, but then we hit boom, 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 a lot of, in the last week or so, a lot of price targets. So including this level here, again, this is a very well-defined support level, and everything works in reverse when you start going up. Now you have overhead resistance levels. That's what I'm going to do in this video. I'm going to give you levels to watch. This is a big one right now. And I'll say this, pretty much that's Friday's lows. So with QQQ, remember NQ reversed just a hair shy of that T5 final target. So what happens is these are the typical reactions so far. And now you have those lows from Friday established. They're pretty significant in my opinion. This rally so far, I know what hopefully not 99% of you are thinking, but I know there's a lot of comments about the government shutdown. Okay, I'm just going to digress here for a second. If your trading style consists of trading on news headlines, I mean this, and I'm not being facetious at all. Good luck with that. I mean it. I wish you luck, but this site primarily is about technical analysis. Anybody can read the news and then buy a stock that, if you're basically driving in the rearview mirror. Usually by the time a news headline comes out, it's mostly, if not entirely, and sometimes then some priced into it. So, we all know the shutdown, the headlines are saying it's pretty much imminent. The Republicans just wanted, the main thing they didn't want to cave in on is the extension of Obamacare credits, right? And so it looks like, you had, 6 or 8 Dems, flip sides and cave in. And so, again, it's kind of baked in the cake and the market's rallying on that. But again, I've always said this, the technicals and the fundamentals, they are intertwined. And almost always, at least more often than not, the technical breakouts and breakdowns, buy and sell signals that I get on the charts when the indexes break down, or a stock, be it earnings or something else, it coincides with a fundamental catalyst. In other words, a break of a bullish chart pattern or breakout could coincide with a good earnings report, or at least quite often I see a shitty earnings report, but the stock's washed out, and then for boom, reverses because the last of the sellers have sold. So I just want to say that, and again, I fully acknowledge what's going on in the with the government shutdown, but I had also stated, I had a couple questions put to me the last couple weeks. Hey, what are you expecting? Everything I'm reading in the press, they're saying, oh yeah, you're going to have this big rally, a relief rally. Well, remember, until last week, we didn't get a correction. The shutdown's the longest in history, right? What is it, 40 days or whatever? And the stock market, just until last week or two, was at all-time highs. And so I replied to somebody there, like, what, they're talking about this relief rally. Relief from what? Until we just had this correction, it was more earnings induced and worries about the AI bubble and news coming out on AI stocks. It was all tech. I highlighted it last week. The financials were still holding up. S&P was holding up relatively well. It was a tech correction. So by that logic, what correction is there to reverse? What relief of what if the market's at or recently was at all-time highs? Remember, it's been a 40-day shutdown. And so if we go back 40 calendar days, I'm doing it right here, 28, we're at 30, 1.2, somewhere in here. So again, the shutdown was pretty much a non-event to the stock market. That's what I wanted to impress, and I have in the comments that I've made in the last couple of weeks. So I go off technicals. Again, first and foremost, that has the highest weighting, and nothing has changed there. There's the primary breakdown right there of QQQ, the back test, the rejection, the BOD or secondary trend line, and now we're coming up on back testing there. So I have to share this because I read comments. I know how everyone gets all bullish now, and they follow the media. Again, I follow the media, and I know a lot of you will read the same articles I'm reading and listen to the folks that come on TV and all that good stuff. But that's it. So let's talk levels. All right. So QQQ. Now that I have these charts back up, remember I had different targets on NQ, the Nasdaq 100 futures, and QQQ for the reasons I've stated before. The futures trade around the clock. You have different reaction points, and I'll look at the chart and kind of just the scope of what I see. So QQQ, although this doesn't show after-hour trades and pre-market, we would have come closer down there to T4 probably. But again, the Nasdaq futures, I always say I look at them both, and then if you're let's say short a position, you have everything coming up to targets. Sometimes it's the first of the two that hits, and that's where the buyers step in. It's kind of the tail wagging the dog. If you have a lot of heavy buying in the futures, that will ultimately spill into QQQ in the regular session. And I watch both. So this was last week. Did we get that weekly bearish engulfing? Oh yeah, we would have. Yep. So we've solidly, and again, I'm doing this because this is what is formulating my longer term outlook. There's another and a big, that's the biggest bearish engulfing we've had. It was bigger than this one that marked the top, bigger than that one. Did that one take out that body there? Yeah, I think so. It's pretty fat. And next step up, you have this uptrend line on the weekly of QQQ right here. But there's a bearish engulfing. But remember, this comes after a sell signal, breakdown on the trend line, back test, now bearish engulfing there. So we'll see where it goes. Again, this is nothing is 100% in technicals, just like in fundamental analysis. All we can do is, you have to pick a strategy, a style, and then have a trading plan and stick with it unless something changes. So like I said, something can change today. I'm going to get to the semis in a second, or this week, or not. So let's go to that chart of NQ. All right, there it is. All right, so it was very clear. We were here Friday morning. I posted that chart out to you, gave it in the comment section, I believe, right after the first post, and recognize this bullish falling wedge, which never broke out. And as I said in that post, if we couldn't, and didn't stop at T4, we'd go down to T5, and you can see we reversed a hair shy. We're talking of a fraction of a percent below that fifth target zone, and then went on to break out. That's a bullish falling wedge. That's a powerful breakout. So I'm going to imagine a lot of folks listen to my voice, even though, if you've done technical analysis for a while, you probably believe in it as firm as I do. This is what it's all about. Most might think, oh, this is just news because the shutdown's likely to be over. Yes and no. They're not mutually exclusive. It is the catalyst, the fundamental catalyst, but the technical catalyst was a breakout, and that led to that strong buying. So this morning, the last post I got out to before this video was a chart of this, and that's my bounce target zone. And anything there doesn't change anything. This was an expected bounce if the wedge broke out. The wedge broke out. This is the bounce. It's what I believe to be a counter trend bounce, because this is a 60-minute chart. I just spent the first 10 minutes of this video talking about the daily and weekly charts. Those sell signals are intact. They override. They paint, to me, the bigger picture where we're going in the coming weeks to months. The 60-minute charts, the 15-minute charts help predict where we're going to go hours to days ahead, right? So they're shorter term time frames. These are intraday periods. Every candlestick is anywhere from 15 minutes to 60 minutes, depending on what time frame. So that's it. So it's a counter trend bounce, and we'll see what happens. So that's it. And as I said, this was T1 was right here. And so that's why I gave you this bounce target zone right there. Is it objective to short? Yes. But you might want to wait and see. Now we're going to segue back into the, I've covered this, let me make sure. Yeah, I covered the small caps for you. Let me show you the futures too for you small cap traders. This is RTY. This is my 60-minute chart. It's been diverging, as I've talked about. Divergent high 1, 2, 3, 4, all part of the same divergence. With the indicators going lower and lower, divergence gets bigger and bigger. This was our primary trend line. It goes to the left of this chart. You can't see here, but that was the primary uptrend line. Basically broke down, back tested. There was a lot of volatility recently, so we had this little spike through there. But other than that, it back tested, got rejected. Here's our primary downtrend line right now. It's new. It only has a few reactions, but I drew it in today. And so far, that's what's capped this rally. This is, as I showed you earlier in the video, the recent lows. We need to break on the small caps to open the door to the next downside. And that is, once again, an official trade idea, meaning I've given you targets and suggested stop, which I already covered here. And so that's that. And you can put that same downtrend line off the highs right there if you want. And look, if you want a tight stop, you go somewhat above there. My preference with the volatility being high is on a daily close. And especially, remember, as I often say, if you're trading the daily charts, the most significant, or really the only relevant developments are on a daily close. In other words, if you're on a sell signal, what I mean by that. Now, if we break this intraday, yeah, I would jump in. I wouldn't wait because it's probably going to go down quickly to T1. But if we pop this little trend line here, and that's why even because this is a larger pattern, that's why it's set, and volatility has been high. Remember, that's why I have this stop set on a weekly close above that level. All right, now I just want to give you ES too. The S&P 500 does matter. I don't cover it as much because I've said this many times, I'll say it again. Unless the financials are in meltdown mode or something's blowing up there, the S&P 500 and Nasdaq 100 are always going in the same direction. It's just the Nasdaq 100 and a bull trend will go up more in percentage points, and in a bear trend it'll fall more. The same reason I'll usually trade GDX and or silver in lieu of gold. You're either going to get the call on gold right, and you might as well get paid for it, right? You're going to be right or wrong. Same thing with the stock market. So ES, I just want to show you, has the same. This is my 60-minute chart. There's our divergent high. This was the primary trend line. Breakdown, back test, gave this little wedge here after the back test. That's right here. You can see a little wedge pattern. That was our divergence. Rejected. And now we have this near-term downtrend line. This is a 6-month, 2-hour candle. So 120-minute, just to zoom out a little farther. So I want to say this is also at resistance. So That's it. So I got a chart out to you right before we started the video with I had it shaded in with my coloring tool, with this being, my expectation for the bounce target today. If I'm correct and we're going down, because as I made clear to reiterate, nothing's changed in my longer term view. It might after today, depending on what SOXX and what QQQ does, or maybe sometime this week. But as of now, so what I do in that mode is, look to, short rallies into resistance. And that's an objective level, or at least highlight it for you, those of you that want to. Now, if you're bullish, take that same thing. And as I said earlier today, if we take out this 25,887 level, that's most likely, but most likely going to punch us up and do the same thing this market's been doing for a while. Make a marginal new high. I'm taking my divergence lines out here. That's all I'm doing. That was a divergent high. And any marginal, assuming it's just marginal, slight, and then a reversal, it's kind of the pattern of this market, will be a divergent high. And sure, so dip buying on these corrections works great. And as I've said many times, especially recently, if you are longer term bullish, take these short targets that I do on pullbacks on the short term charts and use them to add to your longs. I've yet to see, there's a few, just a handful, a couple critics on the site, always critical of the Nasdaq 100 trades. Never, ever, and if I'm wrong, please show me one example. Do they ever post here or here? They always come out and start posting once the market goes on to make a new high about, oh, I told you so, this market's going to keep going up. So that's fine. But if are you buying the breakouts to new highs? Because each one keeps getting sold into. If you're bullish, you want to buy pullbacks, and that's where value is added to both yourself, if you're doing this, or others, that might be following. Please post levels. And as I said, take these support levels, my price targets, which are supports, and each and every one of these would be a potential buy point if you are bullish and looking for new highs. You would do a lot better instead of buying that NQs right here. Infinitely better here. You average that, you're sidestepping that loss, and especially if you can be an active trader, turn around and short up, cover, go long. But again, I'm not looking for this scenario yet. This is still my preferred scenario, but let's see how the day finishes. No reason to jump the gun right now, but I just want to kind of reiterate that's what I'm looking at here. So let's roll into I think I covered the indexes pretty good. Let's look at the semis. SOXX, kind of my go-to. And once again, when you're trading the daily time frame, all that matters is how you close a day. For example, this is what we call the skinny part on a candle is the shadow. When the shadow is below, it's called a tail. When it's above, it's called a wick. That shows you what happened intraday. And that's why that's not a breakdown. That's not a whipsaw or a failed breakdown. It's just intraday noise. Again, if you're trading on the daily time frame. That was a breakdown, as I said Friday. They would take a hell of a rally, and I don't see it happening, and we got it. And that was a solid daily close above the trend line. Right now, it's intraday. The day is still very young. So, if we close, and you have to squint if you're here or here, basically anything at this point, because Friday was a sell signal, made it very clear then, sell signal I've been looking for, waiting for, and that sell signal doesn't get undone if you park back on the trend line. It's just a back test. However, if you get up, this is where I can just tell you right now, that's where most likely you're going to pop it and run and most likely go to new highs. That's why I had that level, 304.77. Let's call that 305, right? So 304, almost a 305 point security. So round up 23 cents. You're talking mere basis points. So call that about 305. Here, we'll even make it official, right? Let's just do that for kicks and giggles. That's a level that if you're, if you shorted the semis on Friday, or you want to short them now, again, you're above the trend line. So this is what I was trying to say. There's no reason to short right now because the semis at this moment are above the trend line. What's the difference of just waiting to see this intraday recovery fail? You're talking, 1%, and the downside is huge. So at this point, they have recovered the trend line. It is real. Now, it's not, we haven't closed the day yet. You get above 305, you can see it was support. There's a gap in there. three candlesticks. The high on that candle right there, the shadow hit the body part there. We had another body and the high hit right there. So that's the level. So I think a stop should be placed somewhere in here. My preference would be on a daily closing basis. I haven't made the SOXX an official short yet. Did I give you targets on it? No, I haven't. And I'll do that depending on how this thing closes. This is a 60-minute chart right here. So basically, again, it looks like a back test. And being that we got those sell signals on Friday, let's see what happens here. If we start moving lower, I can tell you this is most likely, again, Friday's lows will have wiped out all of this relief rally for the shutdown news. And to me, that's going to be quite bearish. And remember, I also, as I covered in Friday's video, last one, a lot of stocks, the most important stocks in the whole world. NVIDIA, if you want to just look at one, that's really everything. They successfully tested their 50-day moving averages. So this was a bounce. It did not come out of the blue. Yes, we had sell signals on the semis, the SOXX breaking down. Although NVIDIA never broke down, it hit, held its trend line and price support, came off the 50. Broadcom, like again, all covered on Friday, hit the 50, bounced, and also parked. You can see, look at this. I haven't touched this trend line since created it. It's created back on the 1st of August. You can see right there, updated if I dragged it or extended it or whatever on November 7th. And so that's another. It's what we call stick safe. Intra period, we're down below the trend line. It's very well defined too. Comes off all these lows right here. And, we went down, we hit the 50, we had price support there, reversed and closed to park the day right back above the trend line. So again, if we take out Friday's lows on a lot of these stocks, you're going to have taken out the trend line again, and you'll have taken out the 50-day, especially on a closing basis. So right now, like I said, it's kind of a mixed bag. At this very moment, SOXX is back above that trend line again early in the day. Let's see how we close today. If it's indeterminable or a mixed bag, I'll say so, and then we'll have to just see how the week finishes. But that's it. Taiwan, I already went over this on Friday. All of these guys, and there's a stick save, a false breakdown, a little whipsaw. Although when I look at a trend line like this, in my opinion, to validate a trend line, it takes 3 distinct reactions. So you only have 1, 2. You never really had one. You kind of cut through it there. So this is kind of a meh trend line. It's not super well defined. What's more important is this price support level and the 50-day. And again, I just covered the top 3. There's no reason for me to go over all 30 components of SOXX because these top ones are the ones that matter the most. Until NVIDIA, Broadcom, Taiwan Semi breakdown, the SOXX Semiconductor, the whole sector is only going to go so far no matter what the bottom 10 or 20 stocks do. So we'll watch that. We'll see how today finishes. I think in the video last week, I told you I was going to get to SMCI. I threw that one out to you too. Most recently, the last trade entry on it was a breakdown of this trend line after the rejection off that downtrend line, and that also hit my when I gave it into the video a couple weeks ago. Maybe I did cover it. Yeah, I know I queued up the chart. So a lot of this is just reflexive bounces off price targets, support levels, and there's SMCI. Remember, SMCI is not a semi super microcomputer, but they set up the servers for a lot of the NVIDIA chips and AI centers. And again, we could do it across the board, but there were a lot of these posts were sent out last week. A lot of stocks hitting price target. Everything's playing out to plan. It's just you don't go. That's why I list multiple price targets. If this was my final price target, and again, I've told you if we get down here, I'll probably be extending that on Carvana. You don't go like this straight down. You zigzag down. And T2 coincided with the 200-day moving averages. So. And now, if you want, I can tell you right now, this is an objective reentry, or at least it was at today's highs, on a bounce back to T1. T1 was support. We hit it. We bounce. Then we took it out. What did we do? It becomes resistance. Then you go to the next target, and you can short bounces back to that. if it doesn't, and again, this is a volatile stock, so you're going to trade through these levels a little bit to the downside, a little bit to the upside, because Carvana is like, it's like a meth head on, with a shot of epinephrine, adrenaline. It's a very volatile stock. It goes up and down, regular days, 3, 4, 5% up and down. It often does, can do double-digit days. So you're going to get that extra volatility. And the way to trade it is you beta adjust your position size down. You take a smaller position, and that allows you to use wider stops, and you'll be paid for it, because if this one hits that fine, T4 again, it'll probably be extended. That'll be a 35% drop. And then I also gave you weekly targets on this one. So if that final target's hit, that's going to be about an 84% drop. And again, the point I wanted to make or reiterate is a lot of stuff hit support last week, and especially on Friday. Most important, that the NQ. And then the financials. So that's one of the things I said, continue to watch. XLF, the financials are also they peaked here with a divergent high, give us a sell signal there. This is a big support level to me. Big level. I think I already have an alert. 5132 comes in with the 200 exponential and simple moving average. We've reversed just above it a few times. There's a downtrend line, which again, it bullish. So I'm going to wrap up here, but in summary, we just hit the bottom of where I expect this bounce to go. If I'm right, we're going to go down further. I showed you on NQ, gave you that zone. We just hit the bottom of the zone. I got it out to you first on a post and followed up in the video. Here's XLF at downtrend line resistance. I just showed you RTY and small caps, IWM at the same downtrend line. There's SPY right here. I showed SPY is the ETF version of the S&P 500, also at downtrend line resistance. And so if they pop it, it's going to do two things. It brings in buyers, natural buyers, and it also short sellers keeping tight stops should have their stops not too far above that line. So they start to get popped, and that creates more buying. Remember, when a short seller closes their position, they are literally buying that position, whether it's a stock or a futures contract. You buy to cover, and it puts the same exact buying pressure that a natural buyer, meaning someone who didn't have a position and went long a stock. It's a buy order, and it does the same thing. It creates upward pressure on it. And then if so, where to? Well, there's an uptrend line, back test of that trend line. And then if you put in a new high anytime soon, I'll tell you right now, it's not a high that I'm going to chase. It's a high that I would expect will be the same pattern that we've been doing for a while. Correction follows. And at some point, I realize that's the pattern. It's easy to look back in hindsight. I didn't think it would go up this high, but it's easy to recognize that pattern. If you think it's going to continue indefinitely, then keep buying every dip. But I promise you, as the technicals haven't changed. In fact, again, to reiterate, bigger picture stuff, bearish engulfing candles is a SPY on the weekly. PPO crossovers are in effect. We had the bearish engulfings on the SOXX, on NQ last week, or QQQ. And then I like to use this, let me move this over one here. Put on my PPO histogram. I talk about this as a trend indicator a lot. I really like these, what I call big hills. The histogram on the PPO just tells you the differential between the PPO line, which is all the way down here on the bottom. The blue line is your PPO line, close cousin of the MACD. And the white lines, it's signal line, also known as the 9 EMA, or the 9 EMA is a signal line. And when the two cross after a trend on a weekly chart, these help to delineate bull and bear trends. And so you can see this was a bearish trend. That was a bearish trend. These were the biggest drops in years and the biggest rallies in years. And so these tend to come, and again, I don't use them. I stay away when these hills are little. That's when you're kind of grinding around. It's you're going to get whipsaws. I like to see these big hills, inverted hills, big uphill, and then you get the crossover, and that's usually when it's followed by, as you can see here, and I've done this many times. I just haven't done it lately. Big corrections often come after these hills. Here you got this kind of a flatten out, and see we're getting whipsaws. This is really where you started to cross. You had one little last hurrah. Again, the market was doing what it's doing now, making a marginal ever so slightly new high, crossed over again, and finally that last one did the trick. And there was a nice counter trend rally along the way that was signaled by a bullish crossover, followed by the next and final leg down. All right, and then on QQQ, I think we're getting close as well. SPY and QQQ are both very close to putting in that bearish crossover like they did right here. Gave you that multi-month correction. Did right here, gave you the biggest drop in years, and did right here and gave you that bear market that ended after that last little hurrah down. Okie doke. Let me wrap up here. Get back into the charts now that I'm back online, and take a look at all the other stuff out there. This has been Randy Finney with Right Side of the Chart. Have a great day.